A very good morning, ladies and gentlemen, and thank you so much for joining us for this morning's virtual event. This particular webinar focused on responsible investing, where we are going to bring you some exciting and cutting-edge research to share and certainly debate with you. My name is Gugulethu Mfupi, and I look forward to being your host here this morning. Now, joining us today, we have a panel of experts who are thought leaders and certainly know quite a bit regarding responsible investing. It certainly does build up on a theme focused on ESG. Environment, social, as well as governance, which we know is no longer just a phrase that has seen a lot of excitement within the investment community, but one that really speaks to the ethos and the understanding that institutional investors are undertaking to ensure that they go beyond just looking at the financial metrics of companies, but really ensuring that there is an impact that they're making in the societies within which they serve. Well, we're looking forward to some of your feedback, and we'll be debating some of these elements with you throughout the course of today. And as I highlighted, we're doing this with you. And this is an active call for you to participate with us in conversation today. So please be mindful and, of course, posting your questions along with any themes or thoughts and insight that you'd like further details on within the Q&A section of our particular platform this morning. Of course, after the panel, we also have an opportunity to engage in some of these questions, and we do ask that you do make reference to the person or the speaker that you'd like to address the question that you have. One thing that I am quite cognizant of is that as members of the media, we're always looking to break some news, find that scoop, and of course, share unique insight with the audiences that we serve. And we will offer you this opportunity to speak to a Momentum Investments representative, and you can certainly do that by contacting Yanni Ruet from MSL, and she'll be able to arrange these one-on-one conversations with you. Fundamental to our conversation here today is that we also want to make sure that you share the message that we share here this afternoon or morning with members of the public. And you can also do that by making use of social media platforms. Now, we are on a number of platforms, primarily LinkedIn and, of course, Twitter. And you can find us by searching the name Momentum Investments on LinkedIn and on Twitter at Momentum INV_ZA. At Momentum INV_ZA. And you will be sure to be able to share some of the feedback that we have on social media, and of course making use of these fundamental hashtags that we certainly want you to incorporate. Hashtag investments, hashtag responsible investing, and hashtag advice for success. Well, we're quite excited to hear from many of you here today, and of course look forward to the engagement that we'll undertake. But I guess it's also important for us to really lay a sense of the landscape with the three speakers who will be engaging us on this very critical topic. Allow me to introduce our first speaker for today as we really get a firmer understanding of the role that responsible investing plays within the South African environment, and primarily what Momentum Investments' approach to this actually is. Our first speaker for today is Sonja Saunderson. She is the Chief Investment Officer of Momentum Investments. Sonja is responsible for ensuring the outcome-based investment philosophy is ingrained and represented in all portfolios. Sonja has extensive experience in constructing goal-based outcomes for clients, as well as portfolio construction, risk management, investment management, selection, and portfolio management in general. Sonja, we're going to start by introducing you today. So thank you so much for your time, firstly, and really looking forward to some of the insight that you'll be able to share with us.
Thanks, Gugu.
Indeed. I guess first things first, there's certainly a lot of hype around responsible investments, right? And we need to be quite cognizant of not just following the hype, but really understanding the merits that are ingrained in participating in ESG, as well as placing that in a greater focus when it comes to investment philosophies and the construction of portfolios. I guess to set the theme for us, Sonja, perhaps if you can enlighten us if there are merits to this approach when it comes to investment opportunities in the market.
Yes, indeed. Thank you, Gugu. Definitely, this is a much talked about topic locally as well as globally. It's certainly something that if you go to any asset manager conference, any themed approach in the industry, everyone is talking about responsible investing. Everyone has launched some sort of a product about it. Data providers are coming to the fore. There's a lot more analytics and a lot more things that you can rely on from a responsible investing perspective. So it really is the place to be. It's the much talked about topic right now in the industry. I think it's important that we first of all just take stock. What is it for us, right? What does responsible investing mean? And for us at Momentum Investments in particular. So I think it's important that we share that for us really responsible investing is going beyond just the traditional means of financial gains and financial returns. And that you're really thinking beyond that about what the impact is that you're lasting and that you're giving in terms of the society and the environment as well. So from that perspective, it's something that really aligns good intent and good practice and purpose with an outcome and an experience that an investor will get at the end of the day. So it's something that's near and dear to our hearts, as I'm sure you'll find out this morning as well. But let's also be honest and say where there's a lot of hype and a lot of focus, there's also a lot of skeptics, right? There's always a lot of skeptics. So you do get a lot of people out there that says, why do we care? You know, it's just motherhood and apple pie. It's not something that we need to spend a lot of time on, or in fact, that we've done a lot of this already. So what is the point about all of this? And then you obviously also get the people that give it a bad rap, let's be honest about it. So if I think about greenwashing, I'm not sure if you've heard the term before, but really where people like to dish up things in a particular way. So it sounds good, you know, you want to be part of that.
Window dressing, yes.
Exactly, that window dressing. You want to be part of that, that popular trend of being able to say, well, I am also a part of the responsible investing movement. And so you do get, unfortunately, a lot of proponents out there that are also dishing themselves up. But if you look behind the scene, you look behind the curtain, it's really just traditional investments for financial gain. So nothing more than that. So I think that's also something to be on the lookout for. And of course, if that then happens, it causes a lot of people to ask, well, is this just another bubble? You know, is this just another something that's going to blow away and just another fad and something that doesn't really belong in investments for the long term?
And that raises a very valid point, right, Sonja, because we've seen a bubble before with the tech bubble that we saw in the early 2000s. And of course, there's a lot of concern about cryptocurrencies in particular and Bitcoin, given the volatility that we've seen in the price.
That's right.
Could that be another potential bubble?
That one is a difficult one to answer, because we were trained as investment professionals to really think about the demand and supply of something, to understand the fundamental nature of what will drive its price over time before incorporating it into investment strategies and into portfolios. So for me, it's difficult to say that I will ever put a lot of money into cryptocurrencies or something like a Bitcoin, because it's just such a funny animal that
no underlying asset.
If Elon Musk tweets on a particular day, you know, the price goes haywire. So it's something that's very sentiment driven, and it's very difficult to know where it will go. But the fact that cryptocurrencies and blockchain technologies and things are yet to stay, I mean, that's a given. That we know is going to happen. Maybe some of my esteemed colleagues have a different view on cryptocurrencies, but I won't put a lot of money in cryptocurrencies myself.
I mean, the reality is we don't know whether it's a bubble or not. Time will tell. I've got an opinion, and my opinion leans towards it's a bubble. The technology and the IP behind cryptocurrency is fundamentally solid, and we've seen a lot more central banks starting to investigate whether their currencies themselves should have a cryptocurrency skeleton. Personally, I believe that's the future, but an investment where Elon Musk tweets and there's massive volatility in the price, and where most of the data mining happens in China, and China's really changing their perspective of how they want to look at their society in terms of technology. I mean, should an investor invest there? It's a very personal question, but from an investment management perspective, my mantra is diversification. You never bet the house. So if you think it's a key to the future, think about it. Personally, I don't do it with my own money. I'm leaning towards the side of bubbles, but time will tell.
Oh, interesting dynamics, eh? Yet we're seeing what's happening in El Salvador, where it's actually going to be used as a legal tender in that particular market. So certainly lots of arguments that can go around in terms of cryptocurrencies. But I guess, Sonja, to stick with you and, of course, understand the merits of responsible investing. Cryptocurrencies, as Mike has mentioned, leaning towards a bubble, still uncertain about where it exists. And that really brings us to the theme of exclusions, where when we take a look at the priorities of ESG investing, that does actually speak to exclusions that need to be prioritized. How is Momentum Investments approaching this?
Yeah, so we don't really believe in investing on an exclusionary basis, although if you think about the history of responsible investing, where it came about, then certainly there are practices, and also practices here in South Africa, that from a religious perspective tells us that an exclusionary way of investing does have a place. There are people that like to invest that way. For me personally, it is something that is a bit of a risk, because we already have a concentrated small market. So if you start excluding too much, you can very often create a concentrated bet on a particular area or sector or something that will create a lot of volatility in your investment. So it's not ideal from a pure investment perspective. And then, of course, in South Africa, we're sitting with the paradox of, if you look at something from one perspective, it's so obvious what you should do. So let's take our coal-based economy, and the fact that if you invest in Eskom from a coal-based economy perspective, if you think about it just with your E hat on, your environmental hat on, no, you shouldn't invest in something like that, right? It just doesn't make sense, because it's not sustainable. We know it's not good for the environment. But if you think about it from a social perspective, I mean, how many households are fed by Eskom, and how many people are actually surviving on the fact that there is a coal-based economy that's supporting and sustaining their livelihood? So there's a lot of that paradox in our system and in our markets that makes it very difficult to just apply a simple default rule of exclusion. But if we look at a little bit of the history, then you'll see some of the thinking also evolve. How responsible investing over time actually came about. It really started from this religious principle and this religious perspective in the 1920s, where the likes of tobacco and alcohol and all of those kinds of things were actually sort of banned, and you were not supposed to invest in it, and people understood what that meant, and that was sort of the theme for social responsible investing at the time. And then, of course, as humankind evolved, we realized, well, that's not, the social aspect of it is very debatable and subjective. And as scientific advances came to the fore, and people understood that investing is not just about a societal impact, but also about an ecological and an environmental impact, it really moved more to a world of talking about sustainable investing. And as you said rightly before, now everyone is talking about ESG, environmental, social, and governance aspects. So there's a rich, I think, history behind it that also should inform us that this is not a bubble. This is likely not to be a bubble. I mean, this movement is coming about from consumerism, the consumer asking to get more information, to get more transparency, to not just get financial gains, but also to know what's going to happen with these investments. Where is it applied? What's the impact thereof? It's coming about from the fact that millennials invest and think very differently about investment management. They don't just leave their money up to a traditional fund manager and they blindly trust him to do something with their money in a responsible way. They want to know. They've got social media, they've got apps, they've got news, they've got everything right at their fingertips.
And are very vocal about those outcomes, right? And holding
100%.
companies to account, because it really does tie into the concept and model around shared value. Sonja, it does sound like an interesting concept that we do need to start paying greater attention to. And you did allude to some examples that are very relevant to the South African environment regarding how to analyze and evaluate the investment perspective of certain companies, depending which hat you're wearing. But I'm keen to understand, if investors are going to pay greater attention to responsible investing, what are some of the principles that they need to look out for?
Well, I think it's important that we look for evidence. If I can quickly show you some of the evidence and bad experiences that we've seen. If you look at some of the evidence in the industry, there are people that like to, we talked about the greenwashing earlier.
Yes.
There are people that like to put up things, and these are two examples, and it's always easy to pick on someone that's offshore, right?
A lot easier. VW is missing in that picture.
True, we wanted to put VW in as well, but we all know someone like, or a company like British Petroleum, that in 2019 had this complaint about the fact that they were misleading the public in their advertisements, talking about their low carbon products and how environmentally savvy they were and how responsible they were. But if you look at their numbers, then actually 96% of its annual spend came from oil and gas. And a similar example, actually my favorite because I'm a coffee lover, is the Starbucks one, where they were bragging about their strawless lid that they brought into the market in 2018. But if you look at the details of it, that actually meant a lot more plastic in the system than the previous version of the lid in the straw that they had. So there's a lot of that sort of bad examples that I think the consumer and the investor out there need to ask questions about. They need to be informed. They do need to ask for the detail. They do need to see transparency. I think there's a body of evidence that us as an industry subscribe to, and I know each provider will implement it differently. But there's certain codes and legislation that we need to uphold. From our perspective, the international body that is the strongest in terms of it is the United Nations Principles for Responsible Investing. That started in 2006. We've been a signatory since then. And we were really part of this phenomenal growth of how the assets changed over time. If you look at it from this perspective, you can see that not only did the number of participants change over time that participated in this trend, but the number of assets that are investing according to the principles set out by the United Nations Principles for Responsible Investing has grown tremendously.
And maybe let's underscore that, because it actually tells us that the members of the investment community are actively participating then to make sure that they abide by some of these principles. Would that be correct?
100%. And to your point about what should people be on the lookout for, well, ask your provider whether they are part of this trend. What do they do in terms of it? The 6 principles, and those are things around transparency, disclosures, collaboration, how you incorporate ESG principles in your decision making. I think the investor has a responsibility and the right to ask, what are you doing about it? You as my service provider, I want to see it. Are you part of this trend? Do you make a difference? And where are your evidence points? I think just back to the rest of the evidence points, I think there's a whole body of research that has dispelled this old myth of responsible investing doesn't matter. You're really one of two proponents. You're either in the camp of, we don't really care, it's motherhood and apple pie, it's just the tree huggers and, let's put them on the side because we do serious investment management. We give great returns.
But the numbers add up according to what we see on the chart.
100%. The numbers make a difference. If you look at it, then the companies that tend to care about the society and the environment are also the ones that tend to perform better. So no longer can you make the argument to say that you only really worry about traditional investment management where financial returns and the risk and return is the major part of it. Because you can actually see from this chart that when you compare, and this was a study done by Morgan Stanley where they compared it 3,000 US ETFs, exchange traded funds and mutual funds, and that was last year, and you can see that for both of them, whether in the bond market or equity market, the funds that were run according to ESG and responsible investing principles considerably outperformed their traditional counterparts. So it's not only there for the feel good and responsible reason, it's also there because of the merit of the financial implications it's got over time.
Exactly. Meeting shareholders' needs in terms of seeking and pursuing a return, but also making an overall impact on the broader societies as well as various stakeholder groups that these entities do tend to focus on. Sonja, thank you so much for that. We'll certainly come back to gain some more insight from you, but we want to expand and get fuller detail and understanding as to, again, the Momentum Investments approach here. And of course, this is where we continue to invite you to actively participate by sharing some of your questions. We've laid the foundation, but we've just touched the tip of the iceberg. So if you do have any further questions you'd like us to address, a gentle reminder to actively make use of the Q&A section of the tab available on our platform, and we'll be sure to address your question as we get into our Q&A segment following our discussion and presentation here today. Of course, we've got lots more insight that we're going to deep dive into, and of course, 2 speakers that I'd like to introduce to you briefly as we'll continue to get more details from them. Not only Motlatsi Mutlanyane, who is the head of alternative investments, but we'll also be joined by Mike Adsetts, who's the Deputy Chief Investment Officer of Momentum Investments. Well, we've heard from Mike very briefly, but just to give you some assurance in terms of some of his brief background, as mentioned, Mike is the Deputy Chief Investment Officer of Momentum Investments. Mike has a broad range of experience spanning investment consulting, investment, portfolio management, product development and client servicing that he's gained at Momentum Investments, as well as Old Mutual and Alexander Forbes. Mike, I guess as we look to build up on some of the background that we've certainly heard Sonja establish, not only from a global point of view, but really understanding the nuances within the South African environment, let's talk Momentum Investments approach here. And perhaps if you can give us some more insight as to how Momentum Investments is making these concepts, these themes, and even these investment returns real for the client base that you serve.
Thanks, Gugu. So let me just start and say that at Momentum Investments, we follow an integrated approach. And I don't know if the audience probably recalls a couple of years ago, it was very a bolt-on approach. There was the Alexander Forbes Targeted Development Investment Survey. That survey over time has become smaller, not because responsible investing has diminished, but because it's become far more all-consuming around how you should approach investments. So at Momentum Investments, we believe in an integrated approach. What that means is we disaggregate the environmental, the social, and governance, and we think about every single type of investment we make. So just touching briefly on the environmental side, we'll look at how do we apply an environmental perspective in fixed interest, for instance. With the context of the South African economy, which is dominated by carbon to generate energy, we need to be very mindful that it's not a simple question of just how can we reduce carbon emissions as quickly as possible. We need to understand the context and the construct of the economy, but also last year we signed on to the principle of a just transition, which in essence says do not leave people behind. You know, for a project to get popular support and to be integrated into the economy, you need to be mindful what are the implications if you decommission a fire station or close down a coal mine. What are the alternative career paths in the new renewable energy place that you can put them into? So that's the environmental side. The governance side, we've got a very strong pedigree and history in terms of actively voting our proxies and engaging extensively. We talked about Exxaro, which is a coal producer. We invest in Exxaro, but as a coal producer, it's got a significant environmental component. So the issue is about how do you engage with the company and say, what are your policies around climate change? How are you mitigating the impact in the environment? How do you think about it? And how do you disclose it so it's open and transparent? So that's the governance side. And the social side, we've got some projects that Motlatsi will talk to a little bit later that not only have a huge societal benefit, but meet the fundamental requirement from an investment perspective that we get decent returns. Now, that's the umbrella perspective. Today, we're going to hone in a little bit on the alternative investments and specifically the unlisted investments. And why we want to talk about them is those are the types of investments that you get very close to. They tend to be, in terms of quantum, smaller types of investments, but you get very close to the management teams of those investments, and you can have a fundamental and proper impact in terms of how those projects are run, and you influence and you have a very strong framework of what you want to achieve, what's the purpose, what's the intent of the types of investments. So very broadly, that's how we think about it across the different mandates and asset classes that we want to invest in.
I must say, Mike, that's actually quite refreshing because you've given us the overview of how you approach it from the listed environment point of view, and we understand the complexities that remain there. Many members of the media will be familiar with the companies that you made mention of and those complexities, but help us understand more about this bespoke approach, I guess, in the alternative space and in the unlisted environment. How do you approach this partnership to the companies that you seek to invest in?
So there's lots of different frameworks that you can adopt, and we use various frameworks and risk management controls. One of the ones that we've really started to embrace a lot more than in the past is around the Sustainable Development Goals. You're probably aware of the history. It was the 2030 target of the Millennium Development Goals. Governments realized, the United Nations realized that it wasn't actually achievable, and they morphed into the Sustainable Development Goals, which are 17 goals or very focused goals that talk to or are a call to action to governments and companies to fundamentally transform their operations the way they think to achieve good in the world. Now, that's a lot of ground to cover. And what we've decided from a Momentum investment perspective is we're going to hone in and focus on a couple of ones that are really close to our heart. So within the group, in downstairs, we've got the vaccine center that's run by Momentum Metropolitan.
Yes.
So good health and well-being is really one that we want to go into. In the alternative space, a strong focus area for us is clean energy and climate action. So those are a couple of the ones that we want to do. So when we think about the types of investments we make, we would just want to focus in this discussion a little bit more on the unlisted side. And why we like the unlisted side is we can have so much focus, intent, and target purpose in what we're trying to achieve, and we can hone them around specific sustainable development goals. It's not exclusionary. So very much you're going to achieve other sustainable development goals, but we think it's a clarion call to action that really refines you and gives you a clarity of purpose of saying, we want to purposefully invest like this and achieve this goal, and we're going to develop metrics and evidence around that.
Makes
so
sense.
That's more or less what we want to try and achieve.
Sounds like quite a sustainable platform and, of course, a way of approach in terms of the current climate that we're in. In the midst of a pandemic, we're well aware of the economic infrastructure that we also have a deficit of in a country like South Africa. So the focus on clean and affordable energy, good health and quality education, I know is one we'll touch on in just a moment with Motlatsi. But I guess to come back to you, Sonja, the SDGs, quite clear that it's a framework that we're working on. But why is it that Momentum Investments does believe that this is a solid framework to go with and will implement and reap the necessary returns and results that we're looking for here?
Yeah, Kuku, I'm very excited about it. I honestly think that it moves us away from, as you rightfully said, in the listed space, applying certain criteria and tools and screening methodologies to whittle it down to something that's more sustainable and more responsible in its approach, to now actually being in a position that you've got a roadmap that tells you what you want to achieve, first of all, a long-term view, and also that you can be much more targeted and explicit about it. I think it also helps the investor to understand what to hold you accountable to, right? It's always easy to, after you've made an investment, find some evidence for how you've been responsible and a job that was created. But if you set out a path like this, and you say, this is the targeted investments I'm going to make, it's a much more deliberate and focused approach. And I think it also helps with measurement, right? So if this is what Momentum Investments is saying, this is what we're about, this is what we're going to do, then the investor can hold us accountable at the end of the day. So I think it just brings in for better decision making, better quality conversations with our clients, but also being much more deliberate and focused about doing it in a meaningful way.
Makes sense. Mike, before I ask you what Momentum Investments has been up to in terms of forming portfolios and funds that actually might be aligned to this particular focus, I'm keen to ask if from a regulatory point of view, Regulation 28, has this assisted some of your efforts in terms of expanding this particular mandate in line with the SDG focus that we have in place here?
So very much so. So the revised Regulation 28 is trying to put infrastructure at the front and center of investments that the private sector should make. So clearly there is a big focus. I mean, there's a lot of nuances as well. So infrastructure investments by their nature are quite illiquid. So you've got to be very mindful of them. So it's not a case of just ramping up the investments in infrastructure. You've got to do it quite mindfully and carefully. But definitely from the president's perspective, he's advocated infrastructure investments as one of the key measures to try and reignite the economy after the COVID pandemic. There's some great infrastructure investments. There's some less great infrastructure investments. So you've got to be very mindful in terms of how you're approaching it. But with the Presidential Committee on Infrastructure Investments, revised Regulation 28 that's trying to advocate it, it's definitely an area that's receiving a lot of focus. It's an area that we've historically invested quite a lot in, but it's really allowed us to rethink what we're trying to achieve in the space. So it's going to be far more central, and we're going to spend a lot more time talking about the types of investments that we make in the space, aligned to the framework of the Sustainable Development Goals. So when we make this investment, why do we make it? What does it speak to from our focus areas?
So tell us, give us some of the scoop here as to what the particular portfolios are that Momentum Investments been working on.
So I talked about a history of infrastructure investment. So what we've done is we've actually looked at our balance sheets and our investments and said, what do we have and where do we want to go from an investment perspective? So we launching and expanding a lot of our investments, and we've targeted them along 3 dimensions that really talks to the Sustainable Development Goals. So in South Africa, we know we're a carbon-based economy. We are all highly aware of the energy crisis in the country, so we need to address energy as an important component of any investment focus that we have. So we've launched the Alternate Energy Fund, and that's going to look at renewable energy, but also self-generation, biomass projects, and alternative ways of generating energy alongside the traditional energy investments we make. We're an investor in Eskom bonds, for instance. So we do need to strike that balance in terms of the just transition of how we want to take it forward. But alternate energy is one of our proud investments and funds that we have established. The social infrastructure, there it is about how do you benefit communities, and the focus of our social infrastructure fund started with student accommodation, and we're expanding it to look at other sorts of social infrastructure. Very importantly is that there is a fundamental economic and investment merit in terms of those investments. So especially when you talk to social infrastructure, you really need to be mindful in terms of what is the business case, what is the investment case. As a portfolio manager, my primary responsibility is to generate returns for my clients.
Yes.
Then I want to look at, in terms of my belief system, how do I bring those together, and what are the purpose and the good things that we want to achieve them. So that's the focus of the social infrastructure fund. And then the diversified infrastructure, if we're not aware of the 50-year backlog of infrastructure investment in South Africa, we're looking at the US and how they want to do a multi-trillion rand program. We also have a significant need for infrastructure. So we've also launched a diversified infrastructure that will look at water and sanitation. The next big crisis that we potentially face in South Africa is around water and sanitation. So that requires urgent action. So water is one of the areas where we want to look at. Core infrastructure like roads and transport and logistics, so those are important. And also the ones that we're starting to really think hard about is agricultural sector, whether there are viable investments to make in that space. So that's more or less the framework and the funds that we've pegged in. And if you look at our slide, you'll see we've been very deliberate in terms of saying we're trying to achieve a focused set of sustainable development goals. Not every sustainable development goal you're going to achieve in every investment, but in terms of the alternate energy, the thing that we really want to drive is climate action, clean energy, innovation. There has to be a heck of a lot of innovation in terms of ramping up these projects. So that's kind of how we've thought about it. Social infrastructure, a key focus on quality education. Healthcare would also be one when we start looking at healthcare providers, and diversified infrastructure really gives us a broad spectrum of the types of things that we could achieve. We're going to achieve more than that, but we do want to focus.
Makes sense. And as you said, you're starting with the end in mind. You are structuring the funds according to the SDGs that you'd like to develop. And of course, most importantly, making sure that the numbers and the impact do align with the investment outcomes that we're certainly looking for. Mike, we've kept you, thank you so much for giving us feedback, but I think, Motlatsi, we've kept you quiet for way too long. And we're certainly looking forward to hearing more from you, particularly given the portfolio that you take care of. Our next speaker is Motlatsi Mutlanyane. He's the head of alternative investments at Momentum Investments. Now, he has been leading Momentum Alternative Investments since 2011. And Motlatsi, you're really going to help us unpack how this really can be tangible and realistic. We're looking at the particular purpose of the Impact Fund, and of course, certainly identifying how best it is that this can be made real for us. And I'm hoping that you can unpack, where is it that the thinking is behind these investment opportunities in terms of making it tangible, not only in terms of the economic outcomes for the country, but most importantly, the returns and the outcomes that investors are also looking for.
Thanks, Guru. Yes, I guess my team and our job is really to move away from the aspirational, from the conceptual, and to actually look at practically how do we now turn it into reality, right? And this is what the three funds that Mike has spoken to earlier are actually intent on doing. So if we focus, let's say on the first one, the Alternative Energy Fund. This fund, we trying to get our investors to get exposure to companies and to projects that are involved in various clean energy generation projects, energy efficiency, energy conservation, right? And to give you an example, so the kind of technologies we're looking at just normal solar, we're looking at concentrated solar, at wind and hydroelectric. We'll later obviously be looking into hydrogen technology and into energy storage. But that technology is still some way off before it gets to critical stage. So those are the kind of themes that this fund is focused squarely on. We are looking specifically to direct it in the SDGs, the Sustainable Development Goals that Mike has spoken to. So we're looking, for instance, at affordable and clean energy, at climate action, innovation and infrastructure, good jobs, and economic growth. And maybe just to give you an example of one of our renewable projects that we've invested in, we'll show you a video now of the Ilanga concentrated solar power project. This is a project out in Uppington that came out of the Renewable Energy Power Producer program, out of Bird Window 3, I think, back in 2012. The project came online in 2019, so it's had about 2 years of operating track record. It generates about 100 megawatts of power, and it has 5 hours of storage, so which means that it's able to dispatch electricity even into the evening peak and long after the sun has gone down.
I'm tempted to say make it practical for us in terms of households or community. How many households can that light up?
So 100 megawatts supplies over 10,000 homes. But obviously that's just one metric. There are other metrics that we look at in terms of the kind of jobs that are created, the impact on the surrounding community. So in Uppington specifically, there are 2 communities that this project is going to benefit, right? And this is in terms of just community development programs, but we've also put entrepreneurship training programs in place for that. And we've set up also a trust that funds some of the schools and community projects that are going on in the project. So I must say, the kind of things that have been able to come out of this have been fantastic, just in general. And the project has gone over and above what it was actually required to do by regulations. We've actually introduced other things over and above what was actually required of us. So maybe we can show the video now.
The need to protect our planet's resources and to find new and more efficient ways to feed our growing energy needs are not only sensible strategic imperatives for any business, but also critical to help ensure the future survival of life on Earth as we know it. As investors in a number of large, sustainable energy projects, we at Momentum Investments are proud to be part of this growing movement towards more efficient, more cost-effective, and more reliable energy sources. Given the wealth of natural resources in our country, South Africa is perfectly poised to build large-scale projects that can provide energy to our national grid for decades to come. Momentum Investments has a long and proud history of investing in renewable energy, having invested 1.6 billion rand through time. The Momentum Alternative Energy Fund continues this proud legacy. 2 of these projects, Umoya Independent Wind Power Producer situated in Hopefield on the west coast and Ilanga Concentrated Solar Power Plant near Uppington, are groundbreaking projects that are already helping to create a brighter tomorrow for all. Not only do these projects provide power to thousands of homes, but their individual commitment to local upliftment has created a multitude of jobs in their local communities, and the much-needed financial upliftment helps change the lives of the communities in which they operate. Our involvement in these projects is another way that we show our commitment to doing well by doing good, and is a true indicator of what we mean when we say, with us, investing is personal.
Certainly looks quite interesting, right? And insightful. Investing certainly made personal and definitely ticking off the box in terms of the E, the S, and of course emphasis on the G. So really, as you said, Motlatsi earlier, are not only setting the bar, but actually beating it and exceeding expectations that we've seen. Motlatsi, if we do come back to the South African environment, we're well aware of the inequalities that we face and, of course, the lack of infrastructural development that we require. Now, the investment in economic infrastructure certainly makes sense because we're able to see significant ripple effects there, job creation at scale. But, of course, we're also well aware that our population does need to be serviced. And that brings about the argument between economic versus social infrastructure and which of the two perhaps needs to be prioritized.
Yeah, I mean, it goes without saying that there has been almost a skewed focus on economic infrastructure. And not to say that is a bad thing. It obviously is a great thing because, as you say, economic infrastructure is probably the best way to revive the economy and to create jobs. However, what it does is that it means that there's a shortfall, I guess, in what we should be investing on the social side. And that obviously impedes communities in terms of growth and development. But it also means that people are unable then to actually be actively involved in the economy. So those opportunities to be able to convert their abilities or at least their training into economic productivity are shortened, or at least are hindered by not actually investing in social infrastructure. So one of the things, I guess, that ties in with your earlier question about Regulation 28 is that because institutional shareholders can actually invest more in infrastructure, it's been helped, I guess, by the presidency office that Mike was talking to. In total, there's a gap of about 502 billion that's been identified of mostly social infrastructure projects that need funding, right? So government obviously is trying to fund some of these, but I guess it's looking more on institutional investors to see how they can help out with this, because obviously that's where most of the actual capital resides. So I guess the initiatives now obviously to try and crowd the private sector in and to get them to fund these. And to that end, government has identified some 276 projects that they're trying to get to a stage where they can actually be bankable and be able actually to convert them into projects that the private sector would be able to invest in. So that's certainly something that we are involved in, and we're hoping that obviously more and more of our competitors will also be involved in, so that we can actually leverage everyone's funding and capital to be able to get those projects on the go.
I was about to say, you took the words out of my mouth, because I was about to say, well, as a representative of the private sector, is Momentum Investments keen and eager to participate?
Yeah, certainly. So if we look, for instance, at our social infrastructure fund, I guess it's a good pointing case of how we're getting involved in some of this. Now, the social infrastructure fund, the intention there is to get our investors to allocate capital to social accommodation projects. We see these as, first of all, the easiest one, I guess, to get off the ground and get funding, but also because there's actually a dire need, as you know, of accommodation in South Africa, right across, right? To give you an example, the Department of Education, I guess, mentioned that just in the higher education space alone, there's a shortage of some 300,000 beds for students, right? Now, it costs some 54,000 to provide a student with bed and board, right? So when we look at this, we see it obviously as something that we can easily do and get our investors to contribute in. There's a measurable social impact that's there, and also the returns from it are actually quite comparable with what they're getting in the listed space. So it's certainly for us something that we can easily accomplish. In addition to that, we've got some really good partnerships in terms of specialist developers who can actually put up these buildings and manage them. So we've got good partnerships on the development side and service providers. And we're able then to use that, those relationships to be able to provide secure and safe environment for students to study in. We've also got a video on that.
Quite exciting, because at least you're keeping us on the ball here to actually witness these investments.
Yeah, that's right. Because like I said, we're trying to show you practically what we're doing on the ground. The next video will show you what we're doing in Hatfield. So the projects that we've got on there, that's Units on Park that was launched just over a year ago.
Pre-COVID?
Yes, that's right, just before COVID, yeah. And so we've got some good track record just in terms of the cash flows that are coming in there, but more importantly from student experience. It's a 900 plus bed facility. So we've actually got students who've been living in there for about 18 months now. And I guess we can share some of their experience and what they think of that.
Certainly.
Social infrastructure investment has garnered a lot of attention lately. Our focus started on student accommodation, and as interest in these projects increased, we have broadened the mandate on this fund to incorporate other types of social infrastructure, such as lower cost housing and healthcare facilities. The ongoing growth in the need for affordable, well-situated and functional student accommodation has given rise to a number of opportunities for us to be part of this new and exciting investment landscape. Through our partnership with Eris Property Group, we have invested in the development of the beautiful and somewhat iconic units on Park. Situated only 600 meters from the University of Pretoria's campuses and with all the amenities our students require, these apartments provide the perfect, safe and functional environment to give our students their best shot at success. With 998 beds in 288 units, free Wi-Fi, great living spaces and a host of other amenities, Units on Park puts the keys to success firmly in the grasp of those who live there. With a firm focus on social infrastructure and the commitment to quality education as guiding principles in our journey towards the United Nations Sustainable Development Goals, we invest responsibly to give great returns for our investors, as well as help build a whole new generation of leaders to move our country forward. As a business investment, student accommodation makes perfect sense. As a social investment within the Momentum Social Infrastructure Fund, being part of the next generation of leaders is an absolute imperative. Because for us, investing is personal.
Well, that's quite a bit of detail on that social infrastructure fund. But I do understand that Mike did also allude to 3 other funds that might be available. And I'm keen for you to also give us some insight into the others.
Yeah, before we get on to that, maybe I should just add on this one that, this is obviously our flagship development. We're very proud of this. And you can see it looks fantastic. I don't know about when you were at...
Far from
yeah, exactly. I didn't live. I would love to go live there. It looks so nice. Yeah, and they've got free Wi-Fi. So what's there not to like?
Exactly.
And I must also add that we are developing similar facilities. There's one actually that now has just started. Demolitions have started in Braamfontein, right across from Wits. And that's also going to be about 940 beds facility. And that's going to catch obviously students from Wits, from UJ, and from all the other institutions around Braamfontein. So that's going to take about 18 months, I guess. So that will be ready for 2024 intake. The other projects that we're starting, it's just signed off now. So we're expecting that development there will be starting by October. At the latest, sometime in November, is in Cape Town. So in the Cape Town City Ball. That's going to be the largest facility in the country. So we're building a 3,000 bed facility there in the Cape Town area. So we're also very excited about, because that's also going to capture quite a lot of institutions around the Cape Town area. And we've also got some ideas about how to use it also during school vacations, that we can actually open it to the public for travelers coming in, that they can use it for almost like Airbnb.
And that ties into a question that immediately crossed my mind in terms of understanding the outlook for the property sector, right? I guess with the advent of the pandemic and uncertainty about what this working from home, studying from home environment looks like, many might question an investment in the property space. But as you say, not only does it take the responsible investment metrics that we are applying, but clearly from a numbers point of view, the investment does make sense.
Yeah. Certainly. We were also quite concerned, like everybody was in the direct property space, about what the impact of COVID will be, just in terms of the use of the facility, the revenue will be generating from there. But our actual experience has been very positive. Students actually want to be in the facility simply because that's where they can study and they can actually be able to, focus on their education. So during the after March, let me put it that way, our actual resident students in the facility were over 80%.
Sure.
And it's only come up since then. So at the moment, we're running at about 95%, which is exactly what we expected in any event. So that's where the projections have been.
Talk about resilience.
Yeah, absolutely. This is exactly that about this project. So students actually do prefer that simply because they have all the amenities that they need. As I mentioned, they get the free Wi-Fi. They get obviously laundry and everything done there, and they then get the computer labs and everything in the property that they actually can get their studies done. So universities have been working. They've been, tuition has been going on. So the facility has been operating as if there's been no COVID at all. So that's why we actually have been quite positive. So long may it continue like this. Just one last thing. I think obviously that this will develop and evolve in different ways, and we'll see how that works. But we're still quite confident that, particularly from the undergrad perspective, that a facility like this will still make a lot of sense. I think for the more senior students, things may evolve, and working and studying from home may slightly have different dynamics. But from this facility, which is very very much focused on undergraduate students, we're still quite comfortable that the market is there and we'll be able to service it accordingly.
Motlatsi, I'm quite aware that this is one particular fund that we've really paid quite a bit of focus on, but
Yes.
I am aware that there might be others. Mike did touch on 3 others earlier on, and I understand that there's another that we should be mindful of as potential investors.
Yes, that is. So that's our diversified infrastructure fund, right? So Mike did kind of mention this when he was giving an overview of our funds. And the intention with our infrastructure fund is we're looking here for growth capital, particularly in the mid-market space, right? So we're looking for those companies that they own real assets, they're operating assets, so they've got track records, and they're creating value in the long term, right? The opportunities in there and the ability to scale up is huge. And we think that most of these companies need is particularly on the equity side, equity capital, which is what we're providing, but we're also providing debt funding. If they're looking to crowd in other investors in, we're able to do that too. So to give you an example of the kind of things that we're looking at, so this is outside, I guess, of what we talked about in the housing space and the accommodation space. We're looking at water solution and wastewater recycling. We're looking at retail centers, particularly within the community. So this is outside of the urban areas. We're also looking, to a lesser extent, though, at core infrastructure. So this is, your road, rail, and that kind of technology. And in addition to that is also obviously telecoms, that we obviously is now come up now as a technology of interest, and where most of the funding should be directed, and also then obviously data centers and logistics. So that's the kind of area that the diversified infrastructure we'll be looking at, and we're obviously looking to partner with like-minded investors. So investors where this makes sense for them, and this is the kind of exposure that they're looking for, that's who we're looking to attract. But we're also looking obviously for operators, because we're investing in operators, people who can actually make this happen and actually run efficient operations. So those are the other people that we're looking for.
Yeah. I guess just a question that just popped into my mind, especially in light of what we witnessed in the month of July. Nobody really saw the looting and the riots across the provinces of KwaZulu-Natal and Gauteng. None of that was certainly expected. Is that something that's been factored into in terms of this particular diversified infrastructure fund that's been developed? Open to anyone on the panel, but Motlatsi, we'll throw it to you once more.
Yeah. I mean, the riots, as you know, were totally left field.
Yes.
So no one could have seen that coming or anticipated it in any way. So, I mean, to be truthful, I mean, we obviously didn't even think about things like that. So the things that we're looking for is, I mean, the word that you use is that we're looking for resilient technologies and resilient sectors, right? Those that can actually see through. Just incidentally, our own direct portfolio in this, on the community retail centers, we actually were very fortunate in that only one of our properties was hit by this, and even the damage that was that they suffered wasn't significant at all. Where they were able to, the security around were able to contain it. So I think it was a very, looking at it optimistically and not to be boasting, but we were actually very fortunate. Our experience coming out of this. I don't know if you want to
Yeah, I suppose that we do need to face the fact that there is a need to rethink the social compact between the private sector and government.
Yes.
So for a lot of these projects to really scale up and for the private sector and the government to be successful in crowding in the funding, there needs to be consistency. There needs to be policy certainty. We need to see action on corruption. In terms of the rights that Motlatsi spoke about earlier, the people that are in the dock at the moment are sort of scapegoats. There's no real big names that are being held to account. So definitely the private sector is going to be less keen to be a junior partner if there is a trust deficit. So government really needs to come to the fore and address issues. And that's one of the reservations we have about some of the investments we start looking at, and we factor it in terms of the discount models, but it is an area that we do need to focus on. I think the president has made some very good steps in terms of achieving that, but we need more. We need the consistency, we need the policy certainty, we need individuals to be held to account, we need to see more alignment within the ruling party itself. So these are fundamental building blocks that are going to be multipliers and enablers for some of the visions that both the government and private sector share. So it's definitely something that should be addressed and addressed aggressively on both sides.
Indeed.
Yeah. So I must say, the other thing that I guess is worth pointing out is that the retail centers that I'm speaking about are really in the underserviced communities, right? So these
Where
are
the investment is needed.
absolutely, and this is it's not all rural, but it's certainly peri-urban and outside of the main centers, and that's not where the riots were. So that's why I guess our portfolio has been very positive. And the other good thing about these is that they act as catalysts for other services in the area.
Makes
So you'll
sense.
find that a lot of activity in these rural areas centers around where these retail centers are, where these community centers are. So they play a very central role just in the local development in the area. But I mean, in all, this is actually one of our more exciting portfolios, the diversified infrastructure one, simply because the mandate is so broad. And because we're putting equity capital in, it gives us actually, we can leverage that quite significantly and be able to achieve so much more in this space.
You can't
So-
disappoint us, Motlatsi. You've given us 2 videos
Oh,
already.
yes, yes.
So I'm really looking forward to this one to unpack what the diversified infrastructure fund is
exactly. So this is why I'm really excited about this, because I really am punting it. Actually, on that note, I think we can look at the video then that just talks a little bit more about what's in that portfolio.
A strong infrastructure is the lifeblood that keeps countries and economies moving forward. From telecommunications to roads, water sanitation projects, and shopping malls in economic hubs that have previously been underserviced, these facilities and structures carry the flow of commerce that help build and develop the communities whose lives they touch. From an investment perspective, these projects deliver strong, stable, longer-term yields and form a powerful base to the Momentum Diversified Infrastructure Fund. The COVID-19 pandemic and the economic crisis of 2020 highlighted a need to build the structures that keep our country moving and allowed us to rethink much of how we live, work, and function on a day-to-day basis. Being part of the solution that drives us all forward is a source of great pride to Momentum Investments and forms part of our focus on the United Nations Sustainable Development Goals around innovation, infrastructure, good jobs, and economic growth. Investing in an improved mobile and fiber network and in the Bakwena Platinum concession are bringing people closer together and helping to keep the vital links of commerce alive. Our investments in the Chuma Mall, Imala Mall, and Bloemfontein Mall, among others, create jobs, service communities, and deliver a tangible representation of how responsible investing can deliver so much more than just good returns for our investors. Because our vision towards sustainable investing is a holistic one, these locations are built with a sustainable, future-proof strategy where all parts of our economy integrate into a better, brighter future. Because with us, investing is personal.
I think it's been quite phenomenal for us to really get to witness much of the investments that are being made on the ground by Momentum Investments and even identifying the multiple boxes that they tick. If you actually took a look at some of those retail centers, you would notice the solar on top of the rooftop. So hopefully as an audience member, that does give you the reassurance in terms of understanding how broad the mandate of Momentum Investments is in terms of making sure that responsible investing and those principles are certainly aligned with the investment opportunities that we identify. Motlatsi, this really does give us a bigger picture, a broader understanding and more insight into these multiple funds that have been highlighted. If I'm not mistaken, the Impact Fund, Momentum Social Infrastructure Fund, the Diversified Infrastructure Fund that we just saw a moment ago, and the Alternative Energy Fund that was also alluded to by Mike. I'm keen to understand, as we deep dive and continue to get more insight, many might say that the South African market is actually quite small and not agile enough for us to fully implement an ESG approach. How would you respond to some of those sentiments and arguments?
Yeah, so I guess on the second first about ESG, I mean, impact investing, we do this obviously as part of sustainable investing, which is obviously an element of responsible investing. So it goes without saying that ESG principles have to be front and center, right? So we've made sure obviously that ESG is integrated throughout the whole process. So to give you an idea, when we look at an opportunity, the first thing we do is obviously do a due diligence. But even before that, the first thing we do is actually go do an ESG assessment of the management of the project, of all of those factors around ESG. And if obviously they don't get a green light on that, the project stops unless they can actually remedy that. So that just shows how important that we take this, simply because we need to show that not only are we doing impact, but we're doing impact in exactly how impact should be done, right? So that's one of the ways. There are obviously other things that we do along the way. And part of that is that first we want to prove that ESG and impact investing work. Secondly is obviously to show our investors that they can actually, their buck is being put to work, right? So it's actually delivering what it needs to deliver. So we need to obviously make sure of that. And thirdly, because there's already so much guidance on how to do this, right? On how to report on impact, and how to report on ESG. So it would be quite foolhardy of us not to actually make sure that that's already part of the process. And just from our own perspective, we obviously need to take this into account and show that we are responsible with people's money, and that we're doing the right thing with the responsibility that's been placed on us.
Mike certainly agreeing there. So quite clear that this is ingrained within the culture of momentum investments. But speaking of momentum investments, we're well aware that there's a conference, I understand, that will be happening in October later this year. And many of us might be intrigued to actually understand how can we participate, when should we participate, and most importantly, what we can look forward to, because what we've discussed here today really sets the bar and the standard in terms of opportunities that exist with responsible investing.
Yeah, so the conference in October, Gugu, we want to delve a bit more into this. So we'll be looking at case studies. We'll be looking at what's happening in some of our flagship projects, for instance. So we'll maybe go into more detail on what's happening and how we're actually monitoring, how we're measuring this, and how we're looking to report into this. So it also, this was more of a teaser to give our audience an idea of what's happening. So we'll delve a bit more into detail into that. And what the other thing that we'll be looking to do, as you'll see there on screen, we'll try to go through all of the areas within alternative investments. Right now, I guess I've spoken very much on impact. However, we do have other areas that we cover within the alternative space. So we do high yield credit, for instance. Impact, I've spoken about that. Direct investments, we also have private equity strategies in there. And we also run hedge funds mandates. So we'll try and cover these and give our audience a lot more information about what we're doing in this space. So I don't know if you want to add on to the conference.
No, maybe just the context that annual conference, anyone is welcome. So please, I'd like you to join. I would love for the journalists to join as well. It's a thought leadership event where we showcase within our alternative space what we're about, what we're thinking about, the best of our ideas, but also the rest of our capabilities, our traditional asset management and solutions areas, what we're about and what we believe in. So it is a best opportunity to get the scoop on exactly what we're thinking about.
Very important mandate, as you say, to really give us some insight and detail into the approach that Momentum Investments is certainly undertaking. Well, we've covered quite a bit and I'm quite excited, but of course we don't want to leave our audience out of this conversation because we've whet their appetite. We've given you much insight. You've seen the videos and you've witnessed some of the investments that Momentum Investments has actively undertaken. And this really does put front and center the view and the approach of responsible investing, not just as a global theme, but fundamentally how it is that we make this locally relevant to investors here in this market. Well, we've asked you for your questions. Some of you have actively participated, and we're really keen to get more of your feedback as we do have some time to flesh and peel back at the many themes that have been highlighted here today. So please continue sending through your questions using the Q&A facility, which is available on our platform. A reminder that these conversations, or rather questions, have been moderated to make sure that we address as many themes and concepts that many of you would like to raise, and ensuring that we're able to give you the feedback that you require. But we do have some questions that have come through already on the line, and happy to take the first question from Chris. He asks, ESG, where should the focus lie? How should South Africa's acronym be structured in order of priority or balance? SEG, GES, what do you recommend? Interesting question, but I guess, Sonja, let's throw that one to you.
Sure, thanks, Gugu. A difficult question to answer because I don't think there's a right or a wrong answer, to be honest. I do think that given where we're at in our economy, in our cycle, in our socio-economic challenges that we're facing right now, I think I'll be amiss if I don't put the S factor first. I do think that we've got very big societal challenges that we need to address, problems from the past that hasn't been addressed, and things that, as you can even see from our investments, that we believe should be top priority. But I mean, I can't say that the environmental and the governance factors are not important, because if anything goes wrong there, it's going to ultimately affect the S factor as well.
Yeah.
But I mean, if I'm forced with a gun against my head to put something first, I think we do have a very unique set of challenges from a societal perspective.
Very true, and many of which have really been brought to the fore in light of the pandemic, as witnessed by the experiences of many South Africans on the ground.
Yeah.
There is another follow-up question that we do have in just a moment, and that one is to Mike, a question that's been asked by Chris. The question asks Mike, if retirement funds want to invest into local infrastructural investment projects aimed at the local location of their members, will this be possible? And again, how will this be coordinated with the overall South African development strategy?
Yes and no. So generally, it depends on the size of assets that you have to deploy. So for a smaller fund, the real assets that they can invest in would be pooled assets. So those would be assets that invest in a broader variety of projects. So to create a dedicated fund in a specific area won't necessarily address the bigger base of investors that you're looking out for. If the fund has sufficient assets, they can be very targeted in terms of the type of investments that you can invest in. So there is the potential for bespoke, but it really depends on a scale. And obviously over time, the infrastructure imperative is really recently a critical imperative. So we need to let the sector evolve a bit. And it's also going to adapt to the appetite and the desires of the investing public. So if there's a specific focus in some areas, capital gets allocated, then the projects will line up in those areas.
Makes sense in terms of that response. Because
Yes, I would actually like to add something. So in our impact funds, when we talk to trustees in particular, we emphasize that they need to think about impact around their communities, because that's obviously what's most important for them, and that's who the benefit will be greatest for, right? So if you think, for instance, I mean, let's pick an easy example, the mining community, right?
Yes.
So if you're talking to a mining-specific trustee board, you obviously want to see how you can help them to use their capital to benefit the communities around them. So when you look at impact, we see first if it's possible to do something within the immediate community, right? Only if it's not possible, if maybe the wallet's not large enough, or the projects are not at the scale where it justifies that, then we'll expand that. But for the reason that Mike mentioned, if we have a large enough wallet, and if we have enough projects of critical size, I guess, to make it a worthwhile thing, then we certainly would want to. But we certainly crafting the message of impact around impact to you. So how is it impacting? How can we positively impact you and your community as a trustee board?
But it's definitely a discussion to be had.
Makes sense. And I think that's the refreshing part as well for the audience, is that engagement and communication does take place in these environments.
Absolutely.
Yeah.
Indeed. Oh, we've got quite a few questions coming in, and please do keep them streaming in, because we're happy to address them here with our panel of experts. Again, a reminder to type in your question in the Q&A section, and of course enlighten us as to who you would like this question to be responded by. This question goes back to Sonja, and a question asked by James Scott, who says, to my mind, there are two reasons to hold or use crypto. Firstly, as an investment, this is usually flawed, as the crypto is not backed by any income-producing asset, i.e. return, which Sonja highlighted. And secondly, as a means of exchange, this is where the true value of crypto should be. But with extreme volatility, this reason is negated. My question is whether my summarized understanding is correct, or are there other reasons? So I guess, James, just soliciting some feedback here, as of course we bring up crypto, we can't ignore it. It's certainly shifting the landscape. But your thoughts on the, I guess, comparison that James has brought forward?
No, James, I think that's valid observations. I do think the risk that he raised in terms of not having the right engine room, so to speak, that will tell you to invest in it, is certainly what we've also highlighted before, and something that we're concerned about. But I do think the blockchain technologies is something that facilitates a lot more than just that return engine. So I do think there's a place for it. I'm not an expert by any means on cryptocurrencies, but I do think that's why I said earlier, I don't think that it's appropriate to put a large portion of your savings in it. I myself wouldn't put a lot of my money into it. But I do think there's a place for it because there's certainly technological advances and ways of facilitating the transfer of money, and that's golden. That has a value associated with it, and therefore has a price and a return over time associated with it.
Would your stance change maybe with increased regulation? And I only say this because we're well aware the South African Reserve Bank has been evaluating it, SARS as well, looking at actually taxing those who might actually have capital gains that they acquire from.
It definitely will. I think a regulatory leg to it and more transparency in terms of what drives it, and for everyone just to be more clued up about the drivers of the return and the rules around it, I think is going to be golden for that industry, definitely.
I think we touched on something here, more questions around crypto that are coming in the chat service. So maybe something that might be considered in the portfolios in future. But of course, certainty is what we really require to make sure that it's a security and an asset that does offer value to those who invest in it. But the question asked here again from James Scott to you, Sonja. If a government-backed crypto were to be launched, how would the government regulate it? And more importantly, would the government lose the ability to control supply for the purpose of monetary policy?
Yeah, I think I'm going to defer this one to one of my colleagues.
Right?
Yeah.
Mike?
So at least the amount of cryptocurrency that can be issued is controllable. Mm-hmm. With Bitcoin, the problem is that the price of those individual units, we know upfront that there's going to be about 20 million Bitcoin generated over time. So from a supply perspective, government can address the supply perspective. The fact that the other thing that really needs to be addressed is the anonymity of the supply. So one of the sort of attractive features of Bitcoin is that it's anonymous. So if anybody steals your Bitcoin, can you actually prove you owned it in the first place? So I think for it to become a mechanism of exchange that's widely accepted, there needs to be a little bit more work in that space. There's benefits to the anonymity, and cash itself is anonymous, but you need to really address that. The big mechanism for controlling monetary supply, one is the issuance and the other is the interest rate. So you need to think about mechanisms that you can bring both to bear on the problem. And I agree totally with the thesis. Money is a medium of exchange. So an extremely volatile, has to use the word asset, but an extremely volatile asset is not a medium of exchange. So there are developments and evolutions in the cryptocurrency space. I'm thinking about Litecoin, Bitcoin Cash, that they try and address both the supply side as well as the volatility side. But really, for it to become mainstream, I don't think cryptocurrency is going away. I've got a big question mark about Bitcoin for myself personally.
So not under Motlatsi's mandate, right? Under alternative investments.
Well, I'll tell you this much. I mean, we'll be very reluctant to look at it simply because it uses a lot of electricity. Mm-hmm. It's not exactly the most energy efficient technology. So, so out of the blocks, you're already struggling. And we haven't even spoken about all the other things, about security, about actual valuation. We haven't spoken about, where does it fit into your portfolio? Because it's not an income asset. Is it for, long-term keep and hope that, the volatility long-term will trend upwards? I mean, it doesn't, we're not even there yet. We're still talking about, does it meet our impact mandate? No, it doesn't.
You can't even buy a Tesla anymore with Bitcoin.
Precisely. Yeah. Very valid point, because we have seen members of the international community also responding to that call in terms of the energy that it does consume and use up. We'll continue with that focus, but of course expanding it quite broadly as we continue with our conversation for this webinar regarding responsible investing. We've got a follow-up question from Chris, and this one is addressed to Sonja. The question asks, how will the retirement industry coordinate with government on the where, what, and how of ESG investments in order to have a coordinated approach for SA Inc.? Valid question.
That is a valid and a very important question. I think that's something that we're grappling with on a daily basis. I think there are very different initiatives on the go that currently helps with us. First of all, I sit on the ASISA board, so the Association for Savings and Investments of South Africa, and it's a core focus of ASISA to be able to facilitate between government and the savings industry what we do. So there's a lot of coordination between the Principal Officer Association and other bodies, PATSITA and the likes, to actually get together and talk to government about what their needs are, what their requirements are, how to bring it in. There are already codes like the CRISA code in South Africa that we didn't talk about earlier. We talked about the United Nations principles for responsible investing, but something like the CRISA code, I think, is already a coordinated approach by the industry to make sure that we set the right standards. I think where we're not yet at is the monitoring part and the, all be consistent about monitoring and measurement of ESG. But I do think there's a lot of movement between these various, let's call it professional bodies and industry bodies, to mobilize and engage with government. And I think there's been tremendous progress in terms of that already.
Well, we do have some more time to address some questions that will continue to come through, so keep them coming in. We've got about 10 more minutes before we do finalize and conclude with some of the closing remarks from our speakers here today. But Motlatsi, perhaps if I can pose a question to you very briefly in terms of unpacking where the opportunities lie. A large focus has certainly been based within the geographical space of South Africa's borders. But we're well aware that there's some efforts and attempts to delve into renewable, certain infrastructure development within our neighboring countries and right across the sub-Saharan Africa region. Would those ever be considered in future, perhaps using the mandate that Momentum Investments has?
Yes, so our mandate is obviously primarily South Africa, but we are looking at opportunities within SADC. So there is there's a limit that's been placed on outside of South Africa SADC-specific investment. There is an opportunity that's about to come across our desk now on a water project in Botswana. Right, so we are looking at those projects. Momentum Metropolitan, you must remember that it's actually very active as a live company in the region, right? So in Namibia, Botswana, Lesotho, and Swaziland, right? We have relatively big operations in those countries. So we certainly have some assets that are sitting in there that we would want to deploy within these mandates.
Makes a lot of sense. And of course, quite refreshing to actually understand that there is an opportunity that does exist to expand into those markets. Sonja, I guess just before we do conclude, we have members of the media who are on board, but we're well aware that the lives of ordinary South Africans are influenced, right, not only by these investment decisions and their outcomes, but even the capital that then gets allocated to some of these projects. And some might be wondering, how do we explain this to the ordinary South African citizen who is perhaps fatigued by the pandemic, concerned about economic growth, for them to fully comprehend and understand how all of these elements are interlinked. Their investments into a Momentum Investments diversified infrastructure fund and the ripple effects that does have in terms of fulfilling ESG and the sustainable development goals overall for South Africa and themselves.
Yeah, I think that is a big challenge for not just for Momentum Investments, for us as an industry. I do think people are so grappling with the day-to-day existence and challenges, as you say, especially post-COVID, that they don't really get a chance to look, lift their heads up and look at the bigger picture and understand how all of it comes together. I think we'll need to embark on a lot of more campaigning and educational campaigns and the right communication strategies. I suppose also in part why we're doing this today is to make sure that people that are talking to the public, that the public have access via press and media, our own advertisements, as you can say. We're trying to make it meaningful and real. We don't want to talk about financial terms, the traditional financial management things that we learn at university. We want to bring it to people and make them see exactly where their money goes. And what we're doing with it. So I think a lot of that is necessary. And I think it's important that people also understand there's a difference between what we talked about today it's not charity. Responsible investments is not charity. Impact investing is not charity. It's a real hard financial challenge for us to get the balance right between financial gains, risk-return metrics, as well as the impact and the responsible investing themes, and that ultimately affecting them. I think it's important that people realize we don't just invest for you retiring one day. One day. If only
that was the reality, right?
No, that's not me. Not only for you retiring then and having sufficient money to sustain your living standards, but we're also making sure that the environment is right, that the community is there, that the infrastructure is there for you to drive around, that you can go to a shopping mall, that it's safe, that corporate South Africa at that point in time is safe. And from that perspective, we continue to keep engaging where we can influence, where we can motivate, where we can change the world, either via our investments or our proxy voting standards. we will continue doing so. And I think it's important that we just get that message out.
Yeah.
Indeed.
And I also, I mean, just to add to that, I mean, if anything, this strategy of investing brings it closer to the average person out there, because it talks to how their money that's sitting either in their pension fund, provident fund, is actually being used to benefit them or to benefit their community.
Yeah.
So this actually talks directly to them. And also, if you look at some of the investments that we make, these are investments that are giving them, it's protecting the value of money, so there's inflation protection there. It's also generating regular, stable income. So for people who are already drawing, who are already in pension, they know that they've invested in that project or in that asset, whether it's, it's a power plant, a renewable power plant, or it's a water project, and it's paying them regularly every so often, whether it's monthly or quarterly, whatever, it's paying them. So they can actually realize, tangible benefits from it.
Makes sense. And I think that's very important, because throughout the course of this morning, we have been hearing from the videos that this is really investing made personal by prioritizing some of those individualistic outcomes, but most importantly, speaking to the global and local mandate of touching on responsible investing. Mike, I'll give you the last word as we wrap up. And I think for many, we're well aware that when we look at the South African environment and climate, there is a sense of hesitancy or I guess a concern about economic growth and the struggles that we continue to witness. And that might actually lead to some South Africans saying, again, leading to a previous question that we had asked, how easy is it to implement ESG? But I think you've touched on how we have a very realistic outlook of the environment, but of course still being proactive on the positives that we can implement. Perhaps if you can share that messaging with our audience today.
So I think the foundation is, for anything to happen, you need to do something. So the more we talk about ESG principles, the more we bring evidence, the more that the audience asks about it, the more real it becomes. So there's no end point at the moment. It's very much a process perspective. How do we keep doing the right things, and how do we bring the community together to start asking for, how does an asset manager know that they need to focus on ESG? Well, their clients keep asking about it, and then they know. And that's what we need to do. We have to have a lot more discussion, and if the clients drive the appetite, there will be the uptake. The allocations will start happening, government will align, so sort of the stars align, but the starting point is the intent and the discussion, and that's crucial.
And we see that intent certainly being highlighted here today. We see another question has come in through from Chris. And this particular question, happy to direct it back to you, Mark, but open to the panel overall, builds up on a theme that we've been discussing. The question asks, with the recent looting and property damage caused to infrastructure, this poses a risk for infrastructure investments in terms of capital loss and diminished investment returns. How do we educate the public on the impact of such actions and the long-term effect on them personally to refrain from doing so? I think a very valid question, and again, personalizing this conversation of investments. Mike?
So, the community participation, when we look at property developments in communities, one of the key aspects is when you need the construction workers, you pull them from the local community. Once the community sees that a building is a node for economic activity, you start getting community support. And even if you look over the events that happened recently, those shopping centers that had been most effective in terms of bringing in community support, that's where the community banded together to protect that social. So that's going to be very important. So that's the one aspect. And then on every platform where we have to talk about it, to say, if you burn down a school, with limited resources available, you might be sending your kids far further to go to school. The costs escalate. So it's really about the messaging. It's around the social compact. It's around the community involvement. It's actually making it real and repeating the message. And also holding the instigators of those events accountable. And for me, that's something that I'm really looking out for. I've seen some of the names. I really want to see some bigger names, and bigger names being hauled into the dock. So that's what we need. So people start believing that there's accountability. The one that I recently heard, Samsung disabled all their TVs that were stolen in the looting. So, that's a good example of accountability. When you get those things, then you think twice about it. And also to understand, you're not destroying somebody else's infrastructure. If you destroy electricity, if you destroy water, if you destroy a shopping mall, You're not going to have lights when you switch on the switch. You're not going to have water in your running taps, and you're not going to have a mall to go and buy the essentials.
Exactly. Makes sense. It's a buy-in for the full community to actually understand that we all invested and have a vested outcome in terms of these properties, the infrastructure, and of course the developments that we plow our capital into. Thank you so much for your time this morning. Really having gained a lot of insight for our audience, and we trust that you've also enjoyed this virtual webinar that we've brought to you today with the aim of highlighting the focus on responsible investing from a Momentum Investments point of view. One thing is quite clear is that the mandate has been set not only from a global perspective, but it's also being implemented here locally. And institutions like Momentum Investments have not only taken this as a priority, but have also implemented it in terms of their messaging to clients, to you as stakeholders and members of the media, to understand that there's a fully vested interest and effort by all parties involved to actively participate in aligning our investment outcomes to the Sustainable Development Goals, making sure that these do speak to ESG and, of course, the overall development of the environment within which we live and operate, being our country. While we trust that you've enjoyed the conversation that we've shared with you here today, there's a lot of nuggets and insight that many of you must have gained. And that does remind us that there will be a refresher of this conversation available for you to review and watch once more, should you want to come back to any particular themes that have been highlighted. Of course, should there be further details that you'd like one-on-one interviews and conversations with our various speakers, please feel free to reach out to Yanni Ruet from MSL, and you can email yanni@msl.co.za, and Yanni will be able to put you in contact with our representatives from Momentum Investments for one-on-one conversations and one-on-one interviews. We thank you again for actively participating on social media and, of course, sharing the messaging out there. Continue to spread the word, because as we've highlighted here today, we are making investing personal. Not only about the change in the lives that it does bring to the communities that we serve, but even ensuring that your capital, that you invest, does continue to make a difference to your own life from a personal perspective. I'd like to thank my guests for joining us here this morning, and of course the insight that they've shared and being hard at work in putting together the multiple funds that we've heard of and will continue to be able to gain more insight on. I'd like to thank Sonja Saunderson. She's the Chief Investment Officer of Momentum Invest. Of course, Motlatsi Mutlanyane, who's the Head of Alternative Investments, and Mike Adsetts, who's the Deputy Chief Investment Officer of Momentum Investments. And we'd like to thank you for actively participating. A reminder that you can download the fund fact sheets that we've highlighted earlier today. That material is available for you to review and, of course, reflect on. And most importantly, to continue to spread the word about the impact that we're really trying to drive through responsible investing. Thank you so much for your time, for lending us your ears and actively engaging through our Q&A session. On behalf of Momentum Investments and the rest of the team, we thank you for your time today and looking forward to more developments in this space in the future.